Let's start with the market leader, and that is Santam. Remember, Santam is controlled by Sanlam, which I think owns something in the region of 65% of their shares. We'll brush up that detail as we go along. It is the largest player, and as a result has a big share in all of the personal lines and all of the corporate lines that JP mentioned. Market capitalization, 25.5 billion rand. Been around a long time. Price to earnings ratio, 14.8. Dividend yield is 3.46, although over time they have dished out special dividends from time to time as they've ended up with more capital. JP, summarize for us how these guys play. Mostly a intermediated broker-driven sales practice, although they do have MyWay in the stable as well, right?
Correct. So the biggest insurance company, short-term insurance company in our market, the largest market share. And yes, traditionally they were an intermediated player, selling their insurance through brokers. But they saw a few years ago that the likes of OUTsurance and other direct players were gaining a lot of market share, which is the case internationally as well. What they did very well was to make sure that they had a disruptor within the organization. Yeah. They created MyWay together with Sanlam, their controlling shareholder. And today, there's a big shift in their book of personal lines, people who prefer to deal directly with an insurance company, from the Santam book to the MyWay book, while still holding on to the large market shares in the commercial and specialist insurance lines.
Speaking and shifting the attention to their underwriting margins, I noticed in their commentary they talk a lot about the fact that there were no significant hailstorms or weather-related disasters, which is kind of interesting because how would you know from one year to the next whether there's going to be a big hailstorm on the eastern side of Gauteng or in Pietermaritzburg or Cape Town? You just got to take it, lumps and all. That's the way you roll.
Correct. Short-term insurance companies have got very lumpy earnings profiles. The one year you have a lot of problems with hail. For instance, if you go back 2 years ago, my car got smashed with hail. I needed a new windscreen. That was in 2013. 2014 was a great year. Not many weather-related incidents, good crops. So they had a bumper underwriting performance in 2014.
In St. Francis or whatever blows that place.
Correct. So 2015 might be a more normal year, but in any one year, you never know. And that is why for a single year, you could have big profits or big losses, but over an extended period of time, if you price correctly, it's still a very good business model, notwithstanding the volatility.
And that's a good point. So you've got to be prepared to have a little bit of a roller coaster. Speaking of roller coasters, another thing I noticed from the Santam numbers was they put hedges in place on part of their equity exposure in their investment portfolio and took nearly 100 million rand knock because, of course, the market kept going up. Now, isn't that potentially also a risk that they've got investment managers who think they're too clever and they sit around there deciding how they're going to invest the statutory money and the float and make some shocking investment decisions? I'm not saying they did, but that could be an issue with this industry.
It could. It's a strategic choice for a short-term insurance company how they invest their float or excess capital, whether it's only money market and fixed interest instruments, as some of the players in the industry do, which means that your profile from your investment funds is very stable. But if you do have an expectation that the equity market will give you the highest return, even if it comes with some volatility, Santam prefers to invest in equity markets to some extent, but also hedge some of the downside. And because of the cost of hedging some of the downside, they're willing to give up some of the upside, which is exactly what they did.
Well, look, let's look at the 5-year share chart, because you know that's how you judge a company like this, is how it performs through the cycles. And what you can see there is a nice steady upward performance, although it has had its moments. And those are presumably corresponded to periods where earnings were depressed and there was this lightning, hailstorm drama going on. You can see there in 2014. Bringing this all to a head, though, how do you feel about Santam now at its current level? Its new CEO, Lisa Lamprecht's in place, very experienced. Are you inclined to go hot or not on this one?
I still like the business model a lot. I think in Lizay they've got a safe pair of hands.
She came from. Way to say her first name.
Yes, correct. In the SENS announcement, you don't see the acute on the E, but she came from Sanlam Personal Markets, so she's been in the greater group for a long period of time. She's an actuary, so I'm very confident in her abilities and the abilities of the whole group. So, like the business, I think it's fairly valued at the moment. So. It's hot, but I wouldn't say it's red piping hot.
Yeah. Okay, good. Well, I'm going to go with hot too. I like that theory. Something we didn't touch on is that they are globalizing and expanding their businesses, buying their way into some of the other markets, particularly in sub-Saharan Africa. That's also a net plus. But very responsible, reliable players. Okay, so we're going hot on this.